Good morning. Welcome to Boardroom Media. We're joined once again by the CEO of XM, Peter McGuire, for the XM.com weekly market update. Good morning, Pete.
Good morning, Andrew.
Welcome back.
Nice to be here.
Let's start domestically again. Here locally, the GDP numbers came out last week. Year on year, up 3.6. For the quarter was up 0.9. So they're not, the data there is actually not too bad.
Yeah, the overall sentiment is, you've got to say, is positive. And if that can be maintained over the next couple of months leading up to Christmas, then it's a feel-good story.
Yeah, it certainly is. And obviously the impact of interest rates,
Oh,
they're starting to hit. There's no doubt about that.
Yeah.
And how that will flow through to those quarterly numbers is...
and retail sales.
Very much so, yeah. So obviously I think the 50 basis points last week's was already taken into consideration by the market.
We said, was it baked in?
Yeah, and it certainly was. It fell off. It has recovered slightly since, but still hovering around that sort of the high 60s.
Well, exactly, and the US dollar's come off from that high. We had a 110 nearly handle, so it's back at about 108.60, I think, in the last hour or so.
Yeah, but I suspect the Aussie's probably going to be hanging around these levels for a little bit longer yet. So.
Oh, yes.
So obviously the Aussie dollar is very much linked to not only the Chinese economy but iron ore as well, and we can see those figures there. They're essentially tracking one another.
Absolutely, and it's if you want to be a trader, then that's one of the metrics that you should be probably overlaying on all of your technical analysis. See where ore price is and what's happening as far as a long-term trend, and the Aussie has been under significant pressure, and it's going to be fascinating. I just saw in the headline for The Economist the Ponzi scheme for the Chinese property market. Their words, not mine.
Yeah.
So really in free fall, and how's that going to be affected as far as iron ore demand?
Definitely. Talking about the Chinese economy,
Oh, here we go.
We've got unemployment up, consumer confidence down. Three key drivers there is property market down,
Yep.
economy down,
Yep.
and lockdown.
Absolutely.
On the back of
The
COVID.
trifecta.
Yeah. So, and on top of that, we touched on it last week, but the weather conditions.
Oh, frightful. And then the high energy costs and what impact that's happening, and you know the long term from a political standpoint, how Xi's going to run, and so you've got a lot of different levers being pulled, and it's going to be again a fascinating for the rest of the quarter how the dear Chinese, how they function.
Yeah. Well, I think also if the Chinese economy continues to struggle, it may have a positive impact on global inflation.
Oh, yes.
Like moving into next year. So, you can look at it in two ways, but yeah, the numbers coming out of there at the moment aren't too flash. So
politically, it'll be a tough gig as far as the unemployment. That really ticks up. You've got a lot of people you've got to keep happy.
Very much so. Heading up to the UK, so good news out of the UK. New Prime Minister, new monarch.
Bit unfortunate about the Queen, definitely. We don't say that lightly, but we got a king out of it. So
yeah, so at least those obviously happened in a very short space of time. Both those announcements. But back to the economy, the numbers aren't fantastic. So we look at the CPI there, it's certainly heading in one direction for the time being.
Yes, and what the momentum for that, if you look at the gold or the yellowy gold, the headline CPI, that's not a good number, and that, are we in that trajectory? Does that continue? And then you're looking at the headline as far as, the core CPI excluding food, energy and tobacco. Well, all right, let's strip out tobacco. But you've got to add energy as a big concern with the high energy costs and gas prices and what the situation is, and then naturally food. So, yeah, you can see the differential between the two, can't you?
You certainly do. And interest rates will need to go up further. They obviously moved recently, but once again, they're going to be heading in the same direction for the foreseeable future.
Yeah, certainly till the end of the year. And again, how's retail sales, what the Christmas experience is going to be like across Europe as far as weather and conditions economically.
And I think that, as you touched on, the energy side of things will come into play as they enter the winter months in the Northern Hemisphere. Speaking of inflation and earnings, inflation up, earnings down, those earnings numbers aren't, the wage numbers aren't fantastic at all, considering how many negative numbers are there.
Well, yeah, and if you're thinking about from an inflation standpoint, if you had inflation at 1 or 2%, then you would be able to handle without real wage growth. But when you've got inflation running at 10 and no wage growth, the differential there is nearly 15%. It's really damning to the wallet and the purse. And so everyone, as I said last week, lightly, but it's matter of fact, Turkey's at 80%. When you're looking at inflation at 10 or 15% and you don't have wage growth, you are absolutely under the pump.
Yeah, and it hurts. And as you say, that differential, that 15% or whatever it is, that's a big number.
Big number when you're not getting it, and you're coming up to Christmas and kids are saying, well, what are we getting?
Yep.
Mate, we're paying an electricity bill.
So yeah, I know it's not a great story. Heading over to the US, the big number coming out overnight will be this month's CPI number.
Yeah, looking forward to that.
Yeah, so obviously the Fed and the committee members really talked the market down a few weeks ago at Jackson's Hole.
Yeah.
But the anticipation is potentially for that CPI to come off again slightly, but which the equity market will love.
Oh, yes.
If it goes up again.
The equity market won't like. And
not at all.
We've had a couple of nice runs. Friday and yesterday was strong in New York, and Asia was a bit of a mixed bag. It was okay in Aussie. But yes, you're dead right. And they know the numbers, and we'll just have to see the rhetoric coming out of Fed Chair Powell and who's presenting these as far as an inflation story.
Yeah, and I think the economy over there is holding up still pretty well, but there's clear signals that a lot of prices have come down in recent months. Will that flow through to these figures? Time will tell. The anticipation is that it will, but you just never know with some of these numbers.
No, you don't.
Finally, retail sales out of the States as well.
Yeah,
once
this
again,
week.
not like the numbers there have been fairly reasonable over the last sort of 6 months.
Yeah, they have. But it's starting to, it was a little choppy over that summer period. We've just got to see what the actual mood's going to be for July, and possibly, I'm not sure whether we see August, but yeah, I think that's Thursday or Friday's numbers. The forecast there is flat. So, leading up to Christmas, it's all about how much horsepower you've got in to buy presents and to be able to, buy goods from retail stores, and that keeps the economy going.
Very much so. But the one thing the US are very good at, they're good consumers.
Yes, they are.
So, and they sometimes it's hard to back yourself against that. But inflation...
And there's plenty of them.
Yeah, well, that's right. But inflation's clearly playing a big role there, along with the higher interest rates. But yeah, the big one tonight, CPI.
Yeah.
See where that comes in, and we can recap on that next week.
Yeah, we had a big week last week. It was huge for volatility, and this week I don't think it's going to be any less dramatic. So, yeah, strap yourself in.
Time will tell. All right, Pete, thanks for joining us.
Good to see you, Andrew.
And that's the XM.com weekly market update.
Thank you.